Santiago. I'm Kerry Lutz. Today's 9/19/22, show number 425. Well, markets are starting out a little weak this morning, Nick.
Yeah, a little bit on the weaker side, but they've actually come off the worst levels. They've actually rallied up a little bit now, so they're basically flat on the session. Little mixed, but basically flat. You know, the near-term daily chart is very oversold. I mean, we had another sell-off on Friday, as you know, so the markets are a bit oversold. And you have a lot of different stocks at pretty decent support levels here. Apple hit a key support level on Friday. That's getting a little bit of a bounce today. It's not a big move. It's up about $1. Amazon also hit some support. Microsoft very oversold. That has come off the lows. Then you have some, chip names like NVIDIA catching a bid today and a few others. Semiconductors are up a little bit in general. So a lot of stocks last week were very, very oversold into some support. So that's giving us a little bit of a bounce to be found, I should say. So we'll see if the markets can get a little bit of a bid today. I am seeing sectors like home builders. That's like the most. That's probably the strongest group out here today, believe it or not. So goes to show you home builders catching a bid. So that tells you people are trying to fish down here for some bottoms and see if these markets will hold. But the big news is really going to come on Wednesday when you have the FOMC announcement. The Federal Open Market Committee is going to meet on Tuesday. Their 2-day meeting concludes on Wednesday afternoon. So we'll see what the Fed has to say. That's really going to be the main driver in the next couple of days.
All right. So, how do you play this? You best bet to stay on the sidelines till the Fed makes its pronouncement?
Well, we kind of know what they're going to say already. The Fed is expected to raise rates by the Fed funds rate by 0.75 of a point. That's 50 basis points. As always, the verbiage, what they say, can move markets. Many traders and investors are expecting Jay Powell to possibly put something in his statement where he starts to backpedal a little bit. You remember, if you recall the last Fed announcement, they kind of did that. Or actually, it was the last time when they were at Jackson Hole. The markets got slammed. So you never know what he's going to say. Is he going to stick with his hardline stance, or is he going to go like he did last meeting and, say something, put a little twist in one of the words there where everybody thinks he's going to possibly backpedal or pivot. I personally don't think it matters. I think, even if we get a bounce, that's another opportunity to sell into. So, I don't really care what they say or what they do. I really just care about the market's reaction. And that's how you have to play it accordingly. You can't really anticipate because nobody knows. At least I don't know how the market's going to react to what he says. I don't even know what he's going to say, but he can stir the pot for a few days. I mean, that's all right. And if the market bounces, it'll lead to another, selling opportunity, in my opinion.
Yeah, well, one thing that's interesting about the latest decline, Nick, is that bad news has finally become bad news again.
Yes, it has. And, really, everybody's talking about the stronger dollar. As the dollar goes up, the markets fall. I really think as the 2-year yield goes up, the markets fall. Everybody is caught on to the 2-year yield. You remember when we started talking about that ages ago, nobody carried it. And now you see CNBC and all these other financial news networks, they're now talking about the 2-year yield over the last week on a daily basis. So it goes to show you, they're all catching on to it. Today, you got the 2-year Treasury note yield up 10 basis points, sitting at 3.955%. The Fed funds rate is at, basically 2.25 to 2.5. So they got a long way to go here to get the 4%. And, that's where they have to be. So I think Jay Powell knows what he's in for here, how he navigates it, or if he gives anything to the markets, then we'll see how it plays out. But you have so many people out there crying for the Fed to pivot now. It's almost remarkable. I don't think it really matters because it's not just Fed money printing. It's Fed quantitative easing now. I mean, quantitative tightening that they're doing. They're no longer doing quantitative easing. So, these guys have to sell, $95 billion a month worth of assets. At least that's what they told us they're going to do. So I think that the market, has to realize the liquidity is going to come out. The liquidity that comes into the system is really from capital flows overseas. So, is that going to basically take over what the Fed did? That's the $1 million question.
Hey, well, I'll tell you what, they might be selling these assets, but the way they're going to sell them is like selling houses in Detroit, $1 down and $1 a week for the rest of your life. That's how those things will be sold. So they're not really going to weaken liquidity there because they'll just take back paper.
Well, you got to remember, though, before they were issuing more and more and more, they were buying, $120 billion a month worth of mortgage-backed securities and U.S. Treasuries. This time around, they're not buying that. When you put that into the system and it gets leveraged, that creates a big pot of liquidity. This time around, they have a little bit, they're in a pickle. That's really the bottom line this time around. And, we'll see, how far they could push it before something, really becomes problematic. But if you look at Europe right now, some people say Europe's in a depression already. So, again, we'll take it as it comes. I like to use charts. I'll navigate both the long side and the short side. And I think that's the best way to go about it. But bigger picture, it's still very grim.
Mm-hmm. Yeah, well, they're in a box for sure. And they waited too long to change direction. Not that they necessarily ever could have managed this, but if they'd been doing 25 basis points every other month or quarterly 2-3 years ago, we wouldn't be in this mess,
I agree wholeheartedly. But why didn't they do it? Why did they stick with the transitory story for so long? Right? What was the thesis of that? What was the reasoning? Nobody could understand it. It made no sense. I think what happened was between you and I, Kerry, and the listeners here, if you remember back in March 2021, the market started to break down. And there was a little hedge fund out there called, I believe, I can't remember off the top of my head, Archegos. I believe it was called Archegos.
Right. Yeah, sure.
Yeah, that's right.
Yes.
And when that hedge fund blew up, they put a lot of liquidity in the system, and we don't hear about that. But if you notice, if you go back and look at a chart right around that mid-March period, when that hedge fund blew up, the market started to take off to the upside. So that just goes to show me that that's where the Fed had to change course. That's probably why they didn't start to raise rates by a quarter point, which was probably their plan, and they pump money into the system. It's always a failed institution that puts the Fed in a position that they have to do the opposite of what their original plan was. Now, I don't know that for sure. That's just a theory of mine. But, again, I was looking for the markets to break down at that point in time, as you know, and they broke up. And luckily with charts, we go with the trend, and the trend was up for a fair amount of 2021. But I think that's what happened.
Okay. Well, it usually is an event that causes them to shift. And obviously, it wasn't just Archegos. It was probably a number of other hedge funds that were also close to the edge. So they really had no choice. And the bailout took place stealthily behind the scenes. We didn't even know about it.
That's right. And remember the old cockroach theory, right? I grew up in Brooklyn, New York. Yeah. I'll tell you right now, if there's one, there's a million. So, the hedge fund world is the same way.
And in Florida, we got palmettos, which are just cockroaches on steroids, but same basic concept. So gold is weak today, but off of its lows.
Yeah, gold has actually come back pretty nicely now. It's basically flat on the day. You actually have gold miners, the GDX, which was negative earlier. Now that's actually in the green by just a few pennies here, but it is positive. So we're seeing the metals start to make a little bit of a move. Silver was weak early to start the morning. That's come off the lows as well. Platinum is strong today. That's been acting really, really well. The platinum chart is very, very strong right now. Platinum up over another 1% today. So again, I love silver, Kerry. You know that. I've already pretty much screamed that from the mountaintop. And again, looks good on the charts right now.
Hey, we're of one mind on silver. I think long term it's the better play than gold. because it's so depressed. The gold to silver ratio is, or silver to gold ratio is just totally off the chain here. And long run, it is the play, let's face it. But, and if silver leads gold, that is kind of like the ultimate bullish setup for the metals.
It is. It is. And, one thing I'm going to say, too, is that while gold was making new lows, gold miners were not. And if gold miners start to take leadership, which I believe they will, that's also a very, very bullish setup. Now, I'd love to see gold hit my lower target, but, when it gets there, I'll be very bullish gold as well. But right now, silver is the play.
Yeah, I like the fact that the miners have been leading the metal. That's always, that's always the perfect setup because, for a lot of reasons, because of the leverage involved, right. I guess. So it's going to be interesting to see. And finally, our erstwhile cryptocurrency, Bitcoin, man, it got slammed, bounced back, but it's below 20K and it's below the December 17 high.
Yeah, Bitcoin today, overnight, Bitcoin was looking really, really ugly. It has come back, though, so we'll give it that. Right now, I believe Bitcoin's sitting at around 19,365. If you're looking at Bitcoin futures, you could look at a chart right around 2 o'clock in the morning. It traded around 1820. So this has really come back pretty nicely today. But again, it's still in that range. Nothing has changed the bigger picture. But it does live to fight another day as long as it could stick around this 20,000 level. We'll see what it does. But, very, very choppy pattern. And ultimately, in my opinion, it's a monthly chart bear base being built. So has more time. It could bounce around here, but bigger picture, still very, very negative.
Every chart that you look at, the 1 day, 5 day, month, 6 month, year to date, year, 1 year chart, 5 year chart, all red. So it's flashing a lot of warning signs.
Yeah, it's flashing a lot of warning signs, but, it always comes down to the pattern. And so far, to its credit, every time it looks like it's going to break in a significant way, somehow, some way it gets saved. So it lives to fight another day. But ultimately, like I always tell everybody, the larger time frame tells the bigger picture story. And that bigger picture story is that it goes lower. You'll see this thing probably at the 13,000 level. Down the road a little bit, but at the moment, it lives to fight another day. But the bigger picture is definitely negative.
Yeah, it's red for sure. Well, that's it for today. Make sure you tune in on Wednesday, Nick. Like we've been getting double the number of people watching on YouTube, so we would just ask you to please subscribe and share and like and all that good stuff. And while you're at it, go over to Nick's site, inthemoneystocks.com, see how he makes these amazing calls time and time again, and the Twitter feeds at ITMS, at Nick Santiago01, and at Kerry Lutz. And Nick, we will talk to you on Wednesday.
Sounds good, Kerry.